presentation, part of the PowerOptions tools series. Today we're going to discuss the ways that I use PowerOptions to further research and analyze a new trade that I found using one of our search or one of our analysis tools. For those of you that don't know me, my name is Mike Chupka. I'm the Director of Education here at PowerOptions. PowerOptions, of course, is a patented suite of search and analysis tools designed for self-directed options investors. We do support over 23 of the most commonly used option strategies. We offer tools for you to search across the universe of options, to identify only those positions that match your risk-reward tolerance. Of course, further research and analyze those positions, which we're going to discuss today. We also offer a powerful set of portfolio tools to help you paper trade, track, manage those positions. And I will show you where those archived webinars are on PowerOptions so you can access those other tools as well. But today we're going to discuss the different ways that we go a little bit more in depth, how we use PowerOptions to do our further due diligence to further research and analyze a trade. Whether you're using our patented search tool, or you came across a series of stocks that you use to screen against to find long call positions or spread trades, for example, or you identified a position based on the news and you decided you were bullish or bearish and some of the news came out, you still have to identify what are the intangibles, what are some of the things that you can't find on a search screen or a stock chart or anything along those lines. If you just go to a standard search by symbol tool, you see potential covered calls perhaps on a given stock, or maybe you're looking at naked put positions, well, there might be some stock criteria that you want to know before entering into those trades as well. And many of you may have just come across a standard profit and loss chart, for example, saw an idea for a spread trade, maybe that you see from another service, an advisory newsletter perhaps, but there's other data that might be missing on that underlying security that you need to know before you enter a trade. Anytime you're in any of the tools on PowerOptions, whether you're in the search tool, you found a position using the search by symbol, you're just looking directly at the option chain to see the various call and put prices, or I should say call or put prices on a given underlying security, you want to really get familiar with the Edit More Information button next to each listing and each position. Whether you're on the chain, whether you're in the search, whether you're in the search by symbol, every trade listing will have a little blue button next to it with the white arrow. This will be the Edit More Information button. Clicking that button gives you access to further tools, I apologize folks, further tools to more detailed research and analyze the position. We're going to want to take a look at the stock chart, make sure it's going in the trend that we want for the given position. Our intangibles, we want to take a look at the recent news headlines. Is there anything that might cause us hesitation for entering the position? Maybe you'd like to delve into balance sheets or review the last and previous earnings. You'd want to look at that as well. Our detailed research tool for the stock or for the option, we're going to go over some of the main things you're probably going to want to look for in those tools as well. And once you've identified a position, let's say we've isolated ourselves to an at-the-money covered call position, or maybe an at-the-money or slightly out-of-the-money naked put, we're going to want to use other tools such as the search by symbol or the option chain to compare other strikes now that we're a little bit more comfortable with the stock itself to see which position truly satisfies our risk and reward profile as well. And then finally, we're going to want to take advantage of the profit and loss chart or the calculator tools to run what-if scenarios to make sure we're comfortable with all edges of the position as well. This is a tool, a feature on PowerOptions you really want to get comfortable with, and if you're currently not using PowerOptions right now, if you came to the webinar, you stumbled across it on the website, you got an email invitation to today's webinar, these other concepts that we're going to review today might seem fairly basic, but at the same time, you're going to see some other tips and tricks in there that you did not know existed that you probably want to look at when you're analyzing any stock or any new options position. All right, well, all that being said, let's navigate over to PowerOptions right now, and let's go ahead and put all of this idea, all these concepts, I should say, into action. Okay, so when we first go into PowerOptions, there's a variety of different ways we may look for a new position. We're going to start off first with a basic search in a given strategy. So let's just use covered call for the time being, but everything I'm going to look at is the same process I would use in any given position with a little bit of a difference. We'll talk about that a little bit further on as well. So what I'm going to do first is I'm going to go right into the search tool for the covered call screen. Now, whether I'm pulling up a default search. I'm going to scroll down below the listed trades here, and you see that we have different views for some of our default searches for weekly covered calls, broker and advisor recommended, and other strategies as well. Or you have one of your own personal saved searches. That's perfectly fine. But I'm going to go actually to the broker recommended one as well here. Oh yes, Marvin, did the screen not change? There we go. It should be up on the search now. It should have come across automatically. There we go. You should be seeing those right there as well. Okay, there you go. Good, good. All right, so when I first open any given search, down below the listed spread positions, the listed trades, we have that drop-down menu again. Might have our own saved searches, or we might have a default search as well. Now, once I have these positions available, I know that they match the default criteria. I could have set a variety of things for stock price limitation, minimum percent return, range in or out of the money, and a variety of stock criteria as well. Stocks trending in an uptrend if I'm in a bullish strategy, maybe stocks trending in a downtrend if I'm in a bearish strategy, neutral, and so forth. But just because I've entered these criteria and I'm sorting the results by my preferred selection, I'm not going to go ahead and jump into the first position here just because it's listed at the top of the screen. What I have to do first is we have to start doing more of our due diligence. My first step when opening any new position is I'll review the position. We're looking at NBAX. That's stock trading at 1164. Shown that I could sell the August 12 call in this covered call position for 105. Well, this is giving me a really high downside protection of 9% for a 25-day trade and a very high percent return if assigned. Okay, so I know that something's going on with this stock, whether it's, I have some other things, the implied volatility here we can see is extremely high, but I'm going to talk about, oh, sorry, I had a question come in. How do you define the trend, just like MA50 or something more tangible? You know, we have other webinars that discuss this in the search tool. But when you set your criteria, I can set a variety of criteria for my options first and what I want to look for. The stock technicals, everything from percent stock volume, average stock volume, broker recommendation, RSI. Usually when I send my trends, I'll use things such as the SMA 50. I'll look for stocks trading above a 20-day or 50-day moving average if I'm in a bullish trend. I can use the Bollinger Bands as well, even MACD or days above the 20-day or the 50-day moving average. And in your fundamental section, you can of course set a variety of criteria for market cap, earnings per share growth, price to earnings, earnings dates between now and expiration, and more. So in general, in the technicals, I'll use that basic simple moving average field and the MACD crossover line, perhaps even the Bollinger Bands, depending on the strategy as well. Again, let's go back to our results here. So I'm not going to go ahead and just jump on the first trade that comes up. The first thing I need to do is use my More Information button, and I want to take a look at a chart. Okay, I need to make sure that the stock's going in the trend that I set. Now, as we were just asked, of course, I would have had it set to look just at the stock being above the SMA 50 and some of my other trend indicators. But what about previously? If the stock has been moving up, that is a good sign, maybe the last 2 months or so, in the last 50 days. But if there is a severe downturn in the 4 months leading up to that, I may also want to know that as well. Maybe the stock's been gapping up and down, and just now it happens to be above its 50-day moving average, but the stock looks extremely volatile. Well, you can take a look at the 1-year snapshot for this particular position, and that looks pretty good. So just a basic 1-year snapshot. We've gone from lower left to upper right, from $4 up to $12. It's probably hesitating a little bit, but that looks pretty good. What I prefer to use, however, is I'm going to use that More Information button, and I'm going to want to go to Big Charts. The reason why Ernie and myself prefer to use Big Charts is because we can customize it to match what criteria we want to see. So when the chart first comes up, it's just giving us that basic 1-year snapshot on the trend. Okay, but in general, if I'm looking for a new position, specifically a covered call, a naked put position, a smaller trend out, 30 days out, maybe a bull put credit spread or bear call credit spread, I simply want to set some different indicators and customize the chart. So I'm probably going to look at a 6-month chart if I'm just looking at a 30-day out trade. And at the same time, we're going to set some different indicators. Everyone has a little bit of difference, but I'm going to go ahead and select an SMA 20 line, but you could select that to be a 2 line if you want to see the 25 and the 50 day, for example. If you want to see a 3 line trend, you could see the 9, I think 18 and 27 is a popular one to use as well. And you can also look at the EMAs if that's something that you use for your analysis. The reason I prefer to look at the 20-day simple moving average is I can set other upper indicators as well. MA envelopes, Bollinger Bands, volume by price, price channel, splits earnings, and so forth. I prefer to use the Bollinger Bands, okay? And that's based on the 20-day moving average, so that's something we'd want to take a look at. In addition to that, I could look at the volume, RSI, MACD, use fast or slow stochastic. Many of my Power Options customers use the Williams %R or the money flow as well. Not things I particularly use, but they're available there for you depending on which criteria you feel is most useful. So I'm just going to go ahead and set up the MACD line. My lower indicator I'm going to set as the RSI and the volume as well. Now this is just what works for me, but you can customize this any way you want to. Now I'm going to go ahead and draw the chart here, and let's see if I can let's increase this a little bit here. There we go. I'm going to just increase the size a little bit for everyone. And the reason why I'm doing that is because one of the features that I want to look at here is we see that the trend, of course, on the upper level, we're following the Bollinger Band ranges. It hasn't broken up, it broke above recently, but wasn't able to sustain it, and now it's dropped below the 20-day moving average. If this is a neutral to bullish position, I want to look for things that have been sustaining above the 20-day moving average and likely still there, and I haven't seen any drastic pullbacks from the upper line. Personal preference, but that's how we use the Bollinger Bands. Another thing that's a concern here is we want to look for MACD trends. Yes, maybe it's a lagging indicator, but we want to look for things that have shown maybe a gap in the last 2 to 3 days and moving up for a bullish strategy, or maybe this might be something that would be better for a bearish strategy. We just had a gap down, it looks like it's declining, and the RSI has been declining as well. Are those lagging indicators? Yes, but they're giving us a trend here where it's separating. We're not seeing the MACD come closer together. And why do I have volume selected? Well, the reason why I have volume selected, if I'm looking for a specific chart for a covered call, naked put, bull put credit, any bullish strategy, let's be honest, we want to see a good trend lower left to upper right. We don't want to see wild breaks in the stock where we've seen a stock price that has moved up, suddenly gapped down, came back up, gapped down again, gapped up. That's probably not something we want to see in a bull put credit, a bull call debit, a covered call, or a naked put. There's too much chances to get into an unrealized loss and try to manage it, maybe try to manage it by rolling lower and then having the stock gap up against you. We want more of a straightforward pronounced trend. And again, these are all things we could set in the settings, but today we're just focusing on the research and analysis as well. But if I'm looking for a bullish strategy, such as the covered call, the naked put, and so forth, and I find the stock chart I want, and maybe the MACD cross has moved over and it's going consistently upwards, and the RSI is stable, but the volume's declining, that might be something that I might hesitate on. If the stock's been moving up consistently, it's still showing growth, but it's doing it on lower volume, that might be a warning sign that something else is going on with the stock, and it might be primed for a drop in price. Okay, so that's something you want to look for. Now, if I decided looking at this chart, remember we're thinking about a covered call, I was hoping to see a positive MACD, I was hoping to see a stock still remain above the 20-day moving average and consistent. We still have decent volume here, and the RSI is kind of falling in price. But if at this point I decided this is not the position that I want to be in, I'm not comfortable with the stock for a covered call or any other bullish strategy, no problem. I'm just going to close out the chart, and I'm no longer going to be interested in reviewing NBAX for any possible covered call position. I may go research it now for maybe a bear call or a bearish strategy if I don't like the chart or I see more bearish pronounced things in it. But first, I'm just going to go ahead and remove that. Keeping with the covered call theme right now, or any of the neutral to bullish strategies, let's make some subtle changes to the search tool so we can isolate this more to sort of the stocks that we'd want. If you know what kind of stocks you're looking for as far as trend goes as well, we want to enter that right away. So I'm going to go back into the technicals here, I apologize, and I'm going to look for stocks that are still above the SMA 20 and that are in the upper, let's say 50 to 60 percentile of the Bollinger Band range, but more important, I'm going to look for stocks where the MACD line has crossed that signal line, at least in the last 3 days or so. I'm not going to look for it to continue upwards where it's been 3 days or more. I just want to see a crossover in the last 2 or 3 days. So let's go ahead and submit the search, keeping our other criteria. Okay, so now we have CyberArk here and Stratus as well. I don't know CyberArk, but what's my first step as always? Once again, we're going to go to Charts, and we're going to go to Big Charts. Now, I didn't save our last settings, but I'm going to go ahead and do that now. We're going to go to that 6-month trend. And again, you want to set this any way you want. If you use EMAs or 2 lines or 3 lines versus just the 1 line, that's perfectly fine. You may want to use the EMA envelopes or the parabolic SAR as opposed to Bollinger Bands. That's a personal preference. I change this now to my setup personally. And my setup might not be for everyone, but we're just showing that you can customize this any way you want. Okay. So here we've had a recent decline. And the stock has just crossed over the MACD, so it's showing more strength, but it pulled back to the 20-day moving average. This might be something I'm still not interested in. Let me store the chart settings here real quick. All right. So in this case, volume is still okay. The RSI is declining. It's showing that MACD move, but it's still just hovering around that. It's pulled back recently and shown some strength, but it doesn't look like it's stabilized yet. So let me say I'm not interested in this one. I'm not comfortable with it. And let's just move on to our next result, which was Stratus. And we'll go to the same chart once again. Well, that's too level, but it's been pulling up in price. It's been too bland. Okay, so I'm just done with Stratus now. And interesting one. So I see you have multiple strikes here. I'm just going to go to Rig Central. And let's go ahead and look at that chart one last time. Okay, so this one's pulled back, but it's moved back above the 20-day moving average. MACD is gapping up again. Probably looking a little bit better, although Stratus probably was a stronger one with the prices here. Okay, so again, I would set those other criteria for what I'm looking for, but let's say with Stratus. We have the chart. It's been neutral to stable, but it's been pulling back up, and the MACD has shown some lines. There was a decline here that happened. So now what I got to figure out is what is going on with this stock particularly, where it had a big gap down recently. It's been declining in the opposite direction, even though it's showing some recovery over the past 50 days or so. My second step, after I look at the chart, and maybe someone just commented in, maybe that would be a better chart for something neutral like a credit spread or an iron condor, and that's a possibility, if and only if the rest of our research and analysis gives us to that point. So my second step, after I've looked at the chart, is I'm going to go into the company information and news. There's 3 things I typically check right off the bat. The first thing is always the news, okay? The recent news articles for the company. I want to see if there's any intangibles that I can't see from stock information, a chart, or any kind of other trending criteria. Is there any information about an upcoming pending patent lawsuit, a potential boardroom scandal, change of board members, rumors of a buyout, or anything of that nature? I want to know that ahead of time. Okay, so we see here there's some interesting earnings coming up on Thursday. That's something that we have to be aware of. Path out of the doghouse here by Doherty Upgrades. Has short interest in 3D printing, reached the floor, and so forth. So I still want to scroll through here and see what other events, and I may want to go back. Here's an article, the 5 most disappointing stocks of 2015. I want to see why that's listed there and what's going on. So Stratus Systems is sort of in the same industry. Well, it's in the 3D stocks industry. We can see that. But I'm going to want to review these headlines, and I want to see what event is really causing it, A, to have stagnated over this past period. What is the belief that potentially it is having a breakout, and what caused probably earnings? We know that large gap here, about 20% or so, maybe a little bit more. It was much more, actually. It was about 26, 27% from about 80 down to 60, and we had another decline here as well. So we'd want to know why that happens. Okay, we want to be aware of that. Okay, well, Scott says, isn't really relevant news possibly in the price already, and does an insider know before we will? That's true. But to be honest with you, Scott, would you ever enter a position by not looking ahead of time? See, this might not be the best example of why I would look for it. But if there's news about a pending patent lawsuit coming out against the stock, judgment's coming out in a week or two, and my expiration is 4 weeks away. I did a standard monthly covered call, and the judgment on this pending patent lawsuit is supposed to come out in 2 weeks. Is it already priced in right now? Sure, but it's also reflected in the volatility. And am I going to go ahead and open a covered call position on a stock that has a pending patent lawsuit coming out in 2 weeks when my expiration is 4 weeks away, where the stock could potentially take a large hit on that position due to that effect, or it could gap up in price, which might work well. But if I'm in a neutral position, such as an iron condor or something along those lines, I naturally would need to know that before I get into the position. More of what I'm looking for is, even though that it might already be priced in, is what hiccups are ahead of me. The intangibles are potentially ahead of me. I got caught with one several years ago, a few years ago. It was an oil company, El Paso Pipelines, I think it was. And I got into the position. It was a nice collar, so I was protected and I had a good potential return. I'll be honest with you, I didn't do enough due diligence. I didn't go back far enough in the headlines, as there's something in there about 2 months back where they had leased a huge field in Brazil or Colombia, I can't remember, South American country, and there was a ruling that was supposed to come out. The South American country was hesitating to allow them to start producing this field. It's because they were trying to gauge how much they could tax this company. They were going to change their tax things for land lease and things of that nature. I was not aware that that was coming up it was about a 4-week period, and I was in a collar that was out to 6 weeks. Well, what happened is that they decided to hit them with extra taxes and things of that nature. The stock took a 15% hit. Had I done a little bit more due diligence, gone back about another 2 months or so in the headlines, I would have seen that, and I probably would have entered that collar spread knowing that lease was there. Or maybe if I liked the premiums that were available, I most likely would have entered a long straddle or a long strangle, being aware that that announcement could have caused the stock to fluctuate in one direction or the other. This is just why we don't trade things like covered calls and naked puts. If you do, that's fine. I don't have the stomach for it. Why you don't trade covered calls and naked puts on biotech stocks with phase 2 or phase 3 earnings coming up, because you can take too big of a realized loss. So is it already priced in? Potentially. But it's the hiccups in the road ahead that might be reflected in the news articles we may need to know ahead of time. Another thing that's important is, okay, so the covered call premium matches what I'm looking for. We took some time, we looked at the chart, we decided it's what we like for the position. At the same time, we looked at the recent news, we didn't see that there was anything there that might cause us hesitation to enter the position. My next step in the company news and information is I got to take a look at the profile. Okay. Now, I'm not overly concerned. The things we see here are things such as you can get the key executives, how much they're getting paid per year. You see some basic things such as total number of employees is 2,800. Don't pay attention to that too much. But I want to know what the sector and industry that they're in right now. And I also want to know, what do they do? Okay, so to be honest with you, I'm not a big market insider by any stretch of the imagination. I'm a lot like most of you. I am really a retail investor. Okay, I know options inside and out, and I know how I research stock and options. But when I get into these fields, such as see sectors, technology, okay, and computer peripherals, that doesn't mean a lot to me. It honestly doesn't. What is a computer peripheral? It could be anything. I don't know. I know they're involved in computers. I know they're in technology. That's fantastic. But I got to spend a little time here. What is this company doing? And of course, we saw that a little bit earlier, but now we get more information. These are using production and manufactures goods for three-dimensional CAD files or 3D content. They're in the 3D printing industry. They leases and rent 3D printers and 3D production systems. Okay, so if I'm bullish on that particular product in that particular industry, this might be a good trend. This might be a good trade, depending on my outlook, if I think that's going to really take off both in the retail and business to business and in large corporations, that 3D printing is going to be the next wave. That's maybe something that I would consider a bullish position on. But I want to know what this is. And to be honest with you, a lot of us have certain sectors or industries potentially that we like to avoid. We can use power options to filter those out ahead of time. But I've traded certain sectors or industries that just didn't do what I wanted to. And it's almost the same philosophy of going back to an ex-girlfriend or an ex-boyfriend, depending on your gender and depending on your preference. But, you know, burn me once, shame on you. Burn me twice, shame on me. You know, don't burn me again, okay? So there are some industries I don't go into because I've never had luck with them over the past few years. And that just happens. One of the ones is the online educational things. They had a good run a few years back, but they're just going to be rife and strife with just different things for regulation and other concepts of that now. I don't know if they're still good trades. I don't trade them myself. Got burned on one of them. I'm not going back in that sector industry. So if I just didn't recognize the company name, and it could have just been something along the lines of North Junction, let's just say North Junction Academy. Well, I could assume it's stocks, but it might not be. It could just be North Junction. I don't know what they're doing. So when I go into the profile here, I want to make sure, and if it's something that I'm not comfortable with, naturally I'm just going to move on to the next position. So maybe we like 3D printing. We like the idea of it. This stock has had some large hiccups in the last 6 months to a year. We've seen it stagnate, and we see some potential growth. We didn't see anything in the recent news that would cause us hesitation to enter the position. We looked at the profile, and if any of you will go deeper at this point, for example, you want to go deeper into the income statement, balance sheet, or cash flow, this is a good opportunity now to do that as well. Just make sure that if you use any of those, what you're looking at matches. And again, you could have used some of the criteria in the search tool to filter out those that you did not want to see. All right, so took a look at the chart. We know it matches our basic criteria. We took a look at the chart. We decided it was okay based on what we're projecting and the strategy we're using. Didn't see anything in the news that would cause us hesitation. We're good with the profile in the company sector and industry, and then we did some further research here. The next step is I may just go ahead right now and link directly into the stock research tool. The stock research tool on PowerOptions is going to show you everything, every piece of data that we have. My first look, my eyes first view when I click on the research tool is I'm going right into the center section. Number one, when are the next earnings coming up? So we've got earnings coming up on July 30th. This might not be something I'd want to enter as a covered call. I may enter it as a collar so I can limit the downside if there's a collapse. Does this stock pay a dividend? That's something I'd want to know going in ahead of time as well. Other criteria you may want to use, of course, is the earnings per share growth, the 1 year range. Wow, this has been really high and been really depressed, but maybe we have hit that bottom or coming up. We are at the lower 5 percentile range. And if that's something I use for my analysis in a bullish strategy, then I only want to look for stocks that are above the 40% or 50% of their 52-week range. I would have entered that from the beginning. If you analyze in-depth volatility for the underlying stock, the historical volatility, this page shows you all of the available details we have. So you can see things such as what is your 20-day moving average. The SMA 20 price is $33.99. We're above that. The 50-day is $35.40. We're still above that. The 100-day, though, is $43.92. We're below that. So if you would have put in a preference to see a stock trending above the SMA 100 for your bullish strategies, or maybe where the 50-day is above the 100-day, this stock would not have appeared in your results, and that's perfectly fine. Scott says, are your dividends reported on trailing or forward? Looking forward. See, right now there's no dividend data here, but when you see it'll show you both. Okay, so if we had a dividend paying stock, we would show you the last dividend date here and the next ex-dividend date if we have that available information. So you can see both. When was the last dividend and if we have the next dividend. So Scott, if we had a range here for the dividend, oh, I'm sorry, let me erase all drawings. Let me clean this up, folks. If we had a range here for dividends, let's say this stock did pay a dividend, the last dividend would come out and it'd probably have the date here as well. But then you'd see the next ex-dividend date. If we didn't have the data on that yet, you could project where it might be based on the last dividend payment. And again, you also could have selected to see that on big charts if there was a dividend payment and when the last dividends were as well, after you customized it. Other things that may draw your attention, of course, to this, you have your other put-call volume ratio, sort of stock indicators here using options, the put-call volume, put-call open interest ratio. Short interest and the days to short interest is not something I use, but it's there as well. But you have your broker recommendations here, the current week broker recommendation, the change. We typically don't want to see a gain in it. You want to see a drop. The lower range is the better broker recommendation. You know, 1's a strong buy and 2 is a buy. Your last earnings. And then another interesting thing is this stock in any of the recommended lists? Right here we could see, is the stock in the S&P 5-star list, the IBD 50, the IBD CanSlim, NASDAQ, is it in any of those? So right now we see that this stock is only in the earnings this week. We knew that because our eyes were drawn directly to that when we went to the stock chart and the research tool. It offers leaps and it's stocks offering weekly options. So for management principles, we know that we have weekly options we may be able to use. It does also offer leaps if maybe we're looking at some other strategy. But this stock is currently not in any of the highly recommended company lists, such as the S&P 5-star, the value line list, or the IBD. Be able to see that down here at the bottom. And if it's a quick review, if you're researching a stock on PowerOptions, or you saw a stock in the news and you're on your PowerOptions account and you wanted to know if the stock was in an IBD list, for example, you could just type in the stock symbol up at the top, use Starbucks, for example, and click on quotes. And that will take you directly to the research tool here. Yeah, so here, Scott, you see that the last dividend that we have was the 16th, and the next dividend is 8/4. Okay, so that's the information that we have here on Starbucks. So it does show you the next ex-dividend date going forward, when their next plan is. But we see here that Starbucks is in the IBD 50, the NASDAQ 100, the S&P 100, the S&P 500, and the value line long-term growth list as well. So that just gives us some confidence that those other company lists that are created also like the stock that we're researching as well. Okay, let's go back to our search screen here. That's just looking at the stock research. There's also the option research, and I'll use this as well when opening a new position, regardless if it's a spread, if it's a married put, if it's a collar spread. Why do I want to take a look at the options research? Well, this gives me all of the available data instead of trying to force everything on to my results screen when I run a search, for example, or when I run a search, instead of selecting all the information available that we would have for the stock and the option to make a very wide screen there come in, what I prefer to do is I want to go ahead and take a look at that research and go into option research so I can see all of the available data that we currently have for that particular option. Now, this is a smaller weekly position. This buyer's 8/21, 25 days away. I believe that's actually standard expiration. But what we're seeing here is all the information for the bid price, the ask price, the last trade date, our volume open interest, all of our Greeks. What's probably more important on this field are things such as the implied volatility ranges and the IV over SIV. Is the option considered overvalued or undervalued? The IV over HV compared to the stock's historical volatility, or the IV over SIV? And that's comparing it to the implied volatilities of all the options around it. The implied volatility range, where is the option's current implied volatility compared to where it has been over the life of the option? Why is that important? Well, when I'm selling premium, in theory, okay, if I'm selling premium as a cash secured naked put or as a covered call position, if I'm selling, I want to be selling into higher implied volatility. This is up at 88% of its implied volatility range. So what I'm hoping for is if that range comes back to normal, that extrinsic value will decrease, and if needs be, I may be able to buy it back for a lower extrinsic value, not including intrinsic, just the time value, the extrinsic value as well. When you're buying options, whether for protection in a married put, or whether for a long call, a long put, or a long straddle or strangle, you're probably looking at implied volatility ranges that are maybe below 60%. You don't want something that's up at its high. You want something maybe below 60% or below 50%. So if it starts to move back up, the extrinsic value of your long option may generate you some extra premium by looking to close the position, for example. A very popular feature that many of you may not know is there is that we show the entire history of this option since it was released on the market. And right now we're just comparing the current option bid to the implied volatility. There's a lot more features that you can view for more detailed analysis into the option. So right now, as I mentioned, we're comparing the option bid to the implied volatility. But I could change that to the option bid versus the return if assigned for a covered call. The Black-Scholes ratio, what is the change in the option bid to its theoretical value? Volume, for example, open interest, delta of the option maybe versus its implied volatility. There's little different factors you can screen against here to get more detailed information. And again, you'll have the availability to look at the history, the entire history of the option you're researching back since it was released on the market as well. A little bit more in depth than maybe some of you would like to go or maybe even need to go. But it's important to know that an option research tool is there so you can see the changes in the option price since it's been released. If I'm using the implied volatility range, which I do use even for my married put positions, that's probably a filter I've already added. But there's a lot of other information that may be useful for you, so you want to make sure that you start getting familiar with using that detailed stock research and the option research tool as well. Okay, so we're evaluating covered calls here for this particular stock. Remember, what was our process? It came up in the search. We negated CyberArk. We decided we might be okay with a chart for SSYS. We looked at the company news, didn't see anything that would cause us hesitation to enter the position. We made sure the profile matched what we wanted to see, and it wasn't something in a sector or industry that we would want to avoid, and got a little background into what they're doing and maybe their company size as well. We could have delved deeper into the balance sheet, analyst estimates, and so forth. We chose not to for today's presentation, but they are there for you to use. In the research tool, it gave us a quick look now of when is the next earnings coming up. We know that we have earnings on July 30th coming up for SSYS. And we also know that this stock didn't pay a dividend. Okay, so that's something that's useful to know. We could have compared our other ranges. We did see that the stock was below its 100-day moving average, and very quickly we saw the stock was below, the 50-day moving average is below the 100-day moving average. So if that's a filter you use, you may have stopped researching SSYS at this time and moved on to one of the next positions later on your search list. The last step I'm going to do now is notice how I haven't done, in this case, any options comparisons, meaning I'm just looking at the stock itself. I spend the time doing the due diligence on my stock positions because it doesn't matter to me which position we're in. If we're in a long call, if you're in a protected put position, you're doing a naked put, maybe you're doing a bull put credit spread, a leverage spread trade, maybe like a calendar spread, or even an iron condor, or even a long straddle or a long strangle. To me, the strike price selection at this point is not as important because I did already have in my search set to find the positions that I wanted. So I know that the return if assigned, the downside protection, or the max risk in a protected position, the cost basis or percent to double in a long option matched what I wanted to see already. But if the stock is not going in my desired direction and doesn't look like a stock that matches the strategy, it doesn't matter which strike price I select. Right? If the stock goes against me, I'm going to lose money on all the covered calls. This stock has a 15 to 20% drop in this position with the earnings coming out on July 30th. It just has a sudden, I'm sorry, folks, a sudden gap down in price. It doesn't matter which one of these strikes I select. I'm going to lose money. Okay? So with that all being said, that's why we're looking at here. We want to make sure the stock's going in our desired direction. It is in a sector or industry we're comfortable with, and there's nothing in the headlines, the intangibles, that might cause us hesitation. We looked at maybe some of the volatilities, the earnings coming up, other events that might cause us hesitation. But now that I've entered that, and I did look at the option research at that time, but now what I may want to do is take a look at the option chain. If I'm in covered calls or naked puts, at this time in my research, I'll look at the option chain. I'll describe why in a minute. If I'm looking at married puts, calendar spreads, straddles or strangles, I'll look at the search by symbol tool in this step in my research and analysis. And if I'm looking at married puts or collars, if I'm looking at bull put credits, bear call credits, or iron condors, I'd now link to what would be shown as the spread chain. But for here, I'm going to look at the option chain. And I'm going to stay, even though this offers weekly options, for right now I'm going to stay with the August 21st expiration that came up in my search. We know that we have a position where earnings are coming out on July 30th. We know the stock has had a large amount of hiccups over the past 6 months or so, but it's been stable and it's started to move back up in price. Could it be a fake signal? Absolutely. Okay. So what I'm looking at here is, because now I know a little bit more about the stock, I know a little bit more about the trend, I know a little bit more about what's going on with the events coming up, news and earnings. If I want it to be a little bit more protected, for a covered call, if I'm going to stick with a covered call, I may decide to go deeper in the money. Now, the spread we linked over from, the position was either the close-up ones, the at-the-money ones. We saw the 36.50, the 36, and the 35.50. Still offer good downside protection and a good percent return. But if I'm still comfortable with maybe a 5.6% return, maybe I'm okay going down to this 34 strike deeper in the money, still offering me about a 6% return if assigned and a return if unchanged, but now offering me close to an 11% downside protection. So now even if the stock dropped 15% because of earnings and they disappointed again, well, I still have at least 11% downside protection in place so that I might only be losing 4%. I'll have to be forced to manage the position after that. Of course, another idea going in is if I'm comfortable with these premiums, But maybe I want to take a look at a different strategy knowing that earnings are coming up. So maybe I want to take advantage of selling some of this high premium for the just out of the money, at the money covered call. But maybe I want to add some protection in place as well. I know they'll be inflated, but maybe I want to add some protection. Maybe this is a better position to use as a collar trade perhaps, to still take advantage of some of the premium coming in, but protect the downside in case of a large drop. So if it drops 25%, with a covered call, I'd have 11% downside protection, but if I set up the collar correctly, I might only be able to lose 5 or 6% without losing more money going forward. So that's an opportunity, that's a potential. But here we're using the option chain. Again, as I mentioned, if I'm looking at a bear call credit in the search or a bull put credit, once our list comes up and is populated, sorry folks, let me clear up those drawings one more time. When I get to this point now, I'm probably going to look at the midpoint spread chain. Even though this is the one that matched my default criteria, now that I know more about the stock chart, the trend of the chart, what's coming up going forward, I may want to see if there are other strikes that potentially didn't come up in my search screen, but I'd be more comfortable with now that I've done a little bit more due diligence on the stock as well. Okay, and then for married puts and calendar spreads, we'd use the search by symbol tool to look at other strikes as well. All right, last but not least, let's see, I was looking at the just out of the money 36.50 August call, which is right here. 36 is slightly in the money. Well, let's say we decided on that 36.50. We've done our stock research, our due diligence. We took a look at the stock and the option research. We compared it using the option chain or maybe the search by symbol. Now what I want to do, I want to run some what-if scenarios. At this point, I'll link to the profit and loss chart on PowerOptions. We have our position and our information linked over from the search, so we know already that we're looking at a buying maybe just 100 shares of SSYS at 36.11, and we're potentially thinking about selling the August 36.5 call for 270. Now we see our profit and loss chart down below. This is just an out of the money covered call, slightly out of the money covered call position. What are we looking at here on the chart? We've got our basic description. So if we did 100 shares, and we could change that up at the top, if we want to do 200 or 300 shares and 3 calls, we could change that. And I'll walk through that in a moment. But right now, for just 100 shares, we'd have an outlay of $3,611 to buy the stock. We're going to collect $270 in for selling a covered call. Our total cost is $33.41. We don't have any margin requirement on this position because we're covered here. So the total requirement is $33.41. That is our max risk. Okay, regardless of we don't think the stock's going to drop more than 20% or 30% in the worst case scenario for earnings, let's be honest. We are at risk here for $3,341 if the stock went bankrupt. Now the maximum profit, we've collected $270 in, but we're about 39 cents out of the money. So we'd get that extra 39 cents if the stock moved up. So our maximum return if assigned, if the stock's trading above 36.50, all the way out to August expiration, 21st, is 309 or 9.2% on the position. Okay, and that's shown by our profit and loss chart down below. I get a few questions from time to time about what is this chart actually showing. Well, let's take a look. First, anytime you link to the profit and loss chart from a spread position, married put, covered call, long straddle, the blue line here, the hockey stick graph, is showing you your profit and loss expiration. Okay. Oh, Scott asked a quick question. How do you get the midpoint here? The midpoint spread chain, that tool specifically calculates the midpoint. It does it for you on the fly to show your return if you sold at the bid and bought at the ask. In my final stage here, I know that the worst case scenario that I saw on the covered call screen on PowerOptions, when I'm selling a premium, it's showing the natural bid. But if I assume that I can get midpoint right now and I'm on the profit and loss chart, I'll just go into view options. We sold the August 21st 36.50 call, a 270 to 285, so it's about a 15-cent midpoint. Probably could only get 275. I doubt we'd get 280, and I doubt our broker would sell it for 277.50. They might, but let's go ahead and do this at 275. We can get a little bit more of the 15-cent bid-ask spread. Let's see how that goes for us. And that only puts us to 9.4, but still a little bit better premium. All right, so back to the profit and loss chart. The blue hockey stick graph here. Oh, sorry, folks. The blue hockey stick graph is our profit and loss at expiration. As a covered call, we know what? Well, our break even, the stock price that we bought minus the net credit, is going to be 33.36 now with that extra 5 cents. So that's our break even. That's shown with the magenta line right here where our profit and loss crosses the zero line. At expiration, if the stock's at 33.36, our call would expire worthless. We could sell to close the stock. All we've lost is the commission fees. That's your static break even for the position, is that vertical sort of magenta line there. The green line here, the vertical green line, just going right down here, that's just the current stock price. It's just a reference point. That's all it's showing you. And so as we see here, at expiration, August 21st, if the stock's above 36.50, well, we'll get assigned and earn our maximum return. Between 36.50 and our static break even of 33.36, well, we'll still have a profit, just not the max profit of 9.4%. We're still in a profitable zone. Everything below our break even, of course, is a loss. Now, over to the left, it's showing some values on 8/10/2015. Let me go ahead and add that back in. This is merely showing you the gain or loss on the position based on the Black-Scholes pricing model at the halfway point. So that curved red line you see on the profit and loss chart is simply the profit and loss at the halfway point, halfway between now and the nearest expiration. So if you're doing a calendar spread where you're selling an August 21 short call and you're buying a leap call 5 to 6 months out in time, let's say, the curved red line is based on the nearest available expiration. Not the farthest expiration of the call that you're buying, but the nearest expiration. And so here we're saying that, well, if the stock, based on the Black-Scholes pricing model, the break-even's a little bit different, isn't it? On August 10th, our break-even would be right around somewhere between, I'd say about 34.80 to 35.10, somewhere in that range at the halfway point. Okay, so we'd still have a reasonable profit on August 10th if the stock was down at 35.11, but our static break-even of 33.36, that's realized later on. So what is this doing? Why is the halfway point there? Well, it's kind of giving you a gauge of what you would expect to see if the stock does move in your desired direction prior to expiration or moves against you. We wouldn't have the full loss yet, but we're still going to be losing some value on the position as well. When we're on the profit and loss chart, once we've taken a look at the graph here, we see our halfway point and we see our static expiration, what I want to do is run some basic what-if scenarios. Down below, we can calculate the expected profit and loss. What's an important date to us right now in this position? Obviously, it's July 30th. That's when the earnings are coming out. So I want to take a look here and say, what would happen if the stock did drop 10%, down to about $33 per share on expiration? So I'm going to put in an expected price of 33. I'm sorry, not on expiration, folks, on the earnings date. Put in $33 and put in July 30th. So it's about a 10% decrease. Actually, it's about a 10% decrease. Let's go ahead and hit calculate. And what this just shows is we did sell our call originally for $2.75. And if the stock drops down to $33 based on the Black-Scholes pricing model, it's assuming that the call would drop down to $131. So we'd have a gain of $144 on our short call. Of course, we lost $3.11 on the stock in order for that to happen. So an expected loss is $167, which would equate to about 4% or so, 4.5%, about 4.5% on the position. Okay, well, with a 10% decrease, giving up 4.5%, that's okay. We could take it down again. What would happen if we lost another $1.50 or so, drop this down to $31 per share even, let's just say, about a 15 to 18% decrease in the stock after the earnings. Now we're going to loss about $3.10. So we're back to about a 9% loss on the position. And that might be something we're going to be hesitant about going into a position that has earnings coming up. Of course, we could run the opposite scenario. What would happen if the stock gapped up to $39? July 30th after the earnings date? Well, we could close early and get a profit of about $128. It expects that the call would go up, to $436. The stock increases now. That's a loss in our favor. Gain of $289 and the stock loss of $161. Well, why am I going through this? The reason why is because if I'm not comfortable with the monetary loss or the percentage loss that I'd take in this strategy if the stock dropped 10, 15%, and I was hoping maybe for more of a gain if the stock gapped up, hoping it would go to intrinsic value more quickly. Of course, this is all based on using the current volatility. Then I might be hesitant to enter into this position. Remember, this, if the stock gaps up, this 10% or so we entered right now after earnings, and we could liquidate for around $128. That's, just about half, less than half of what we expected originally. Okay, so that's going to be kind of a concern there. If we want to see more than that gain, we might want to take a different, deeper in the money strike perhaps, get more value of the gain in intrinsic without losing the extrinsic value, or we may just decide not to enter this position. I want to run those what if scenarios before I enter a position. And in addition to running the what if scenarios, what if I wasn't comfortable with that loss I might take? Okay. Oh, by the way, one more thing I should have mentioned, I apologize. Once I changed my target date and started calculating expected profit and loss, the curved red line shifted. It's no longer showing 810, and these values over to my left for what the monetary price of my position would be, or monetary value of my position would be, gain or loss would be, at the various strike prices here and the various stock prices, that's now showing us on our selected date. It's no longer at the halfway point. So this is giving us a gauge of what our position would look like at our selected target date, which is right around the earnings event. All right, we've come across a couple things here that might cause us hesitation. We sort of skipped over what we'd look at for the stock chart. Everyone has their own different way of reading it. But if we decided to stick with SSYS, I'm going to be concerned entering a naked put, a covered call position, cash secured naked put, a leveraged bull put credit spread, or might have a 5-to-1 or 10-to-1 risk reward ratio. But if I want to take advantage of these premiums here, I may decide to stick with that 36.50 call, but I may want to run a what if scenario. Could I add maybe a deeper out of the money put, a 32, maybe a 30 put strike that would still give me a reasonable return and give me a reasonable downside protection? Let's go ahead and add that on the fly. I'm going to go ahead and click on View Options. For a static collar, I'm going to keep the same expiration. We know that the premiums have to be inflated for the puts. Look, if they're inflated for the calls and it looks like a good premium, you know the put premium is going to be increased as well. We're collecting $275 for our August 36.50 call, but I may decide to go ahead and take maybe a little bit less than half of that. Let's go ahead and take a look at the 31 strike put here, 95 to 115. So maybe I can get in a good price. Maybe I can get in for $1, $1.05 on this position. Not likely, probably more along the lines of $1.05 or $1.10. But let's do that. Let's use the 30.50 put, and I'm going to put in a premium of $1. Let's see how that changes our dynamic. So I did collect $275, but I'm giving $1 back. Is that going to give me a good risk-reward profile in this position? Not what I'd look for. I'm still good with this for a 30-day trade for a standard collar. Personal opinion, of course. You might have a different risk-reward tolerance. My percent return is still 6.2%. I'm okay with that. But my risk is now 11.2%. I don't want that to be in single digits when doing a standard collar, so I may have to go a little bit higher. Let me clear out that 30.50 strike. Let's go back to our available options for August. I'm going to go ahead and test out the 32.50. No, I'm sorry. Let's do the 31.50. My apologies. Did we just do that one? Oh, no, I did the 30.50. Let's go with the 31.50. A little bit more expensive, 110 to 115, getting $1 more protection. So let's buy one at 115, okay? Okay, so now I'm still around a 6% return. That's not too shabby, 5.8%. Half of what I'd expect with the almost, no, not half, but close to we had a 9.4% return with a static covered call. I'm giving up a lot of that for this put. But now, if the stock dropped 20, 25, or 33%, I'm still getting a good return for a 25-day trade of 5.8%. And I've got a guaranteed limited risk position where even if the stock collapsed 20 to 30%, I can't lose more than 8.7%. And if I toggle the midpoints or the bid-ask spread a little bit more when I place my order, it is highly possible that we could get that down a little bit more. Maybe we could get a 6% yield and an 8.5% risk, and that might be an okay tolerable view, trying to take advantage of this increased premium here, but still having more protection than we'd get. Remember, with a covered call, you might get an 11 or 12% downside protection. That's great. But if the stock suddenly drops 33%, you're still on the hook for about 22, 21% unrealized loss. And after that, the volatility is going to collapse potentially. So now you're only able to generate 1 or 2% premium. This high premium of 9% for the at-the-money covered call is not going to stay after the earnings event. So if this drops 33%, and we've got a 22% unrealized loss, but now volatility comes back to normal for the options. If I have to manage SSYS after that with the covered calls, trying to take back 22% with only getting about 2 to 2.5% with just the out-of-the-money calls at that time, you're talking about 11 months potentially to manage the position before you get back to break even. So in that case, a collar would help us a little bit more. We're still risking 8.7%, but that'd be easier to make up in the case of a 25, 30, or 35% drop in the underlying stock price. Am I going to enter this trade now that I've done my due diligence? No. There are some other things I would have put into that stock, and I never trade a covered call naturally or a naked put position when earnings coming up between now and expiration. That's something I would have put in the search tool from the beginning to narrow out of my search results before even doing the research and analysis. If I was to enter a trade on SSYS right now, it would be something along these lines, or I might even go into the 36 strike call with the 31 or the 30-50 put, just to see if I could still make a good 3 or 4% yield, but try to get this closer to only a 6 or maybe under a 7 or an under 8% loss on the position. But this is not a trade recommendation or suggestion. We just wanted to focus on the concepts of, in any strategy, what steps would I use to research and analyze a stock. First step, no matter what stock comes up and what search you used on PowerOptions, we'd look at the chart, take a look at 1-year snapshot or big charts. Our company news, we want to make sure that there's nothing out there that causes us to hesitation of entering the position, whether we're bullish or bearish. I want to look at the profile, make sure it's in a sector or industry that I'm comfortable with, and I may want to delve deeper into things such as the income statement and balance sheet if you use that analysis. Stock research tool one more time. And we're going to be able to look at different things such as the upcoming earnings date, does it pay a dividend, broker recommendation, what stock listed in, and then we've got those different volatilities we can view and that historical data that we can see on the option also. Then I want to compare it to the different positions. I'll use the option chain for covered calls and naked puts. I'll use the search by symbol for calendar spreads, married puts, maybe long straddles or long strangles. I'll use the spread chain when looking at bull put credits, bear call credits, or iron condors. Because now that I know more about the stock, I want to compare different strikes, what really suits my risk tolerance. And last but not least, we select the profit and loss chart. Of course, that allows us to run those what-if scenarios, take a look at what our position may or may not be worth based on the Black-Scholes pricing model if the stock falls or moves up in price. And at the same time, if we wanted to add an option, maybe tweak our ratios. If I wanted to buy 400 shares of stock and sell 2 calls, or maybe you wanted to do the reverse. You wanted to enter a covered call with 200 shares and 2 calls, but buy 3 puts to enter a ratio to see how that would come out. Any questions that you have about how can I add a little bit more protection, how can I increase income, you'll be able to do that on the profit and loss chart, whether you're in the search by symbol tool, or even the option chain as well. So that's sort of the 5-step process we do. And the very last step is I may go ahead and place the trade. Remember, on PowerOptions, you have the broker link that goes to Options Express. If you're using a different broker, you would just log on at that time, enter your trade, and we'll come back to PowerOptions and add it to the portfolio tool. So now we can start tracking and managing the position that we just entered as well. All right, so I'm going to put something up here very quickly on the screen. Okay, so let's just go ahead and show this. This is what we just reviewed, but this is my checklist, my personal checklist for further research and analysis. Whether I'm in the search by symbol or whether I am in the standard search in a given strategy, again, stock chart, prefer to use big charts because you can customize it. You're going to have a different tolerance of what criteria you want to use to analyze your stocks, that's fine, but big charts is pretty flexible. You may even already have your own charting service either through your broker or something else you subscribe to, that's perfectly fine. But you want to make sure that you get a chart that's customizable that you can set for what you want to see as far as trends, simple moving averages, EMAs if you use those, Bollinger Bands, parabolic SAR, whatever your preference is, you want to make sure the chart gives you that, of course. It is very important, I feel, to check out the intangibles. Check out the news headlines. There may or may not be, hopefully there isn't, but a lot of times when you get stuck in a position, it's just because there was something that was already announced that was coming up, and maybe it was announced 5-6 months ago and you just weren't in the know. You really got to do your due diligence there to make sure you don't get trapped with something that just falls out of bed or suddenly rises in price if you're doing a bearish position from some positive news based on, again, pending patent lawsuit, anything about a board member change or disillusion with the board member, any little tidbit you can get your hands on there. Our new analysts coming out with higher projections for the stock price or lower projections for the stock price. That's something you'd want to see over maybe the last 5 weeks or 2 months of headlines, okay? And you may even want to go back further than that. Of course, then again, we talked about if you wanted to look at the balance sheets and again, the stock profile. Make sure it's something that you feel is in a sector and industry that you're comfortable with, and as well that the profile of the company is something that you're comfortable for, whether you're entering that bullish, neutral, or bearish position. The stock research tool, check out your earnings dates. Make sure you know if you have earnings coming up. On all the strategies on Power Options, you can choose to remove stocks that have an earnings between now and expiration or don't have an earnings between now and expiration as well. So you want to make sure that the stock research, you guys also look at the ex-dividend date, the different volatility values, and also the SMAs. If you want to look at multiple SMAs, you wanted to see a stock that was trading above the 20-day moving average in the search is your first selection for trend, but you also want to make sure that the 50 days above the 100-day or maybe the 20 days above the 100-day, you can do that on the stock research tool as well. And the option research allows you to go really deep into the option research if you wanted to evaluate the history, see if it's an overvalued or undervalued option, and remember the IV range, which you can set on most of the searches as well. If you're buying, you might want to be in that lower implied volatility range because you don't want to be hurt by a volatility collapse unless you're really positive on the direction of the stock based on your strategy. When you're selling, you may want to position it in the higher IV range, hoping that it collapses in your favor. You may be able to buy it back more cheaply. Once you've done that, the last step, of course, we want to compare those other strikes and returns. We know a little bit more information on the stock. We're a little bit more comfortable with the trend and so forth. So now, if I'm doing covered calls and naked puts, I'll take a look at the chain and compare other strikes. Again, we'll look at the search by symbol tool, or there may be some other signature tools such as the spread chain tool, or maybe even the insurance tool and the married put tool, which will give you a little bit more insight to other strikes surrounding the position that was shown on the search to see which one best suits your needs. And lastly, the profit and loss chart, and then some of the calculators. There's a Black-Scholes calculator that you can also link to in the more information button. That allows you to run your what-if scenarios to see if you're comfortable with the position as a whole or the change in the theoretical option price if the stock shifts one direction or the other in your favor or against your favor. You're comfortable with the risk that might happen if X, and you're okay within a few days of the profit you might experience if Y. Does that suit your goals for the position and your expectations going forward? All right, well, that's essentially what I do whenever I'm opening a new position on Power Options in any strategy. Those are my steps. You may have other ideas as well or things that you like to do. Maybe you like to use a certain criteria or a certain view of a position that you didn't see in today's presentation. If you're looking for something on the site and you can't find it, just remember, send us your questions at any time. You can send me an email to support@powerop.com. If you need further insight into where you might locate a certain criteria that you use for your stock analysis or your options analysis, and you can reach us during the day via phone as well. During market hours, of course, you can reach us at 302-992-7971, and there's contact links at the bottom of every Power Options page. Well, ladies and gentlemen, I hope you enjoyed today's presentation. I hope it gave you some further insight on the tools that are available to you on Power Options for doing more due diligence and further research on your stocks and your options. I hope to see you soon at some of our upcoming live presentations. Remember, you can register for the upcoming webinars at any time directly from Power Options, and you can view our archived materials at any time just linking to the free webinars page under the main home tab on your Power Options account, or just going to powerop.com and clicking the webinars link on the main home page also. Take care, everyone. Have a fantastic evening. Have a great trading week, and we'll see you soon. Good night.